So here's the thing that everybody is talking about today is Zillow has announced that they are getting out of the home buying business. And I don't want to speak specifically to Zillow or about Zillow specifically, but more broadly about the iBuyer phenomenon that we've experienced the last couple of years. So for those of you who don't understand what I mean by that is that there are very large companies that have come into the real estate market over the last few years, and they're buying properties directly from home sellers, and they've really impacted the market in a big way. They've impacted the realtor community and the home buyers and home sellers big time. And what I've observed over the last couple of years, when it first started, I noticed that these huge companies with deep pockets were paying prices for homes that did not make sense with the property conditions that I was seeing. And they were overpaying, basically, in my opinion. And they kept doing that, but then I began to realize that what is publicly stated as the sales price is correct. It is the sales price that both parties agree to. The seller of a property agreeing to sell it to this big, huge company for an inflated price, in my opinion, again, based on the property condition. But what they did and what they are doing that is hidden from the public is that they're negotiating with the seller to give them as a buyer a credit for repairs and deferred maintenance of the home. And so that's written up on the financial statement. Both parties agree to it, but that's never disclosed publicly. You can't find this information in the public tax records. You see the price of the home that it was sold for, and that's it. And you could find in the FMLS or the MLS system how much maybe a buyer got a credit from the seller for their financing, but that's like with a traditional buyer with a traditional mortgage. But the iBuyers, weren't doing that. So even that small amount of a seller closing help doesn't even appear. But what doesn't appear at all, and there's no way to know for sure, how much credit the seller is giving back to the buyer. Let me give you an example. Let's say a house has a fair market value of $260,000. But if it was all fixed up, it could go for $300,000. And so the seller agrees to sell the house to this big, huge company with deep pockets for $300,000. And then the buyer, this company, goes back to the seller after they do an inspection of the property and come up with a list of repairs to be made, that there's basically $30,000 of repairs that need to be made. And so they negotiate that as a credit that the seller gives them. They don't reduce the price. The price is still $300,000, but they negotiate a credit that the seller will give a credit of $30,000 to the buyer. And that appears on the statement. It's disclosed for legal purposes among both parties, and the closing attorney knows that. But that's not what's recorded in the courthouse. The $300,000 price point is recorded. So we see that the house sold for $300,000, but we really don't know if a credit was given, how much of a credit was given, and in some cases it's a very large amount. And so it's kind of skewed to begin with what we believe these iBuyers are paying for the homes. But evidently another thing that I saw actually is that so they are negotiating this credit that we don't know about, but the credit that they're getting is about what it's going to cost them to fix it up. So there's no net gain in profitability for the buyer. And the seller gets what they want. They want to sell the house. It's kind of easy to sell it to an iBuyer for the most part, compared to opening your home up for showings. But you never net the highest retail price that way, in my opinion. But these companies are overpaying, so it's close. Will they pay more than what the seller can actually net listing on the market with the real estate after commission? In a lot of cases, it absolutely they can net more money, and I see this all the time because I work and I specialize in buying and selling investment property, and I work with a lot of smaller investment companies and individual investors, and I kind of know that part of the market really well. The iBuyers are a different phenomenon. Again, these are companies with big pockets. They have a lot of investor capital, and they can do things that the smaller guys can't. And another thing I'll say about the iBuyers is that they can afford to take a loss over time. So I believe they were buying houses and turning them into rentals, and they're purchasing at a loss, but they can afford to do that. And as far as the equity goes, but they can then own a income-producing, income-generating asset that gives their investors a return of, to me, it's a minimal amount, the way that the prices that they're paying compared to the rent rates, but you know, whatever, they're getting a return on the money, the capital that they're investing. Another thing that the iBuyers are doing, and I know I'm going off the track a little bit, but this is very important, they are buying homes and holding them. Companies are buying, you know, thousands of homes all across the United States. And part of what they're doing is that they are reselling them in a quiet way. And what I mean by that is that they are turning them into what we call a lease purchase agreement with a buyer who will be a renter. So yeah, they are renting the property. It does become an investment rental property, and they're getting a return on their investment. But they've entered it also into an agreement with the tenant that the tenant will buy the property a year later or 2 years later when they get the credit situated and they qualify for a traditional mortgage to purchase a home. And so these iBuyers are lining up their ducks, basically. When they buy a home, they oftentimes either have a back-end client that they will put in as a tenant, or they know they can find one who will be the tenant, and then they purchase the home a year or two later. And that home purchase will never hit the market, the public market on the MLS. It will be recorded at the courthouse that the property changed hands. So that data is available. Over time, we will see if that really bears out in a large number or not. But that's part of the picture of what's happening. So home sales, these companies are not holding all the properties that they're buying long term. So anyway, that's my take on what's going on in light of the Zillow getting out of the home buying business and people asking me questions. Hey, John, what do you think about this? Those are kind of my thoughts. I don't have specific thoughts about Zillow at this point that I really want to put out there. Zillow is what Zillow is, and it's been interesting to have these iBuyers in the market. It's made it challenging for a lot of realtors. The investor community is very dynamic. There's a lot of real estate transactions that take place where realtors and licensed real estate agents are not involved in, and it's a very dynamic part of the real estate market. So if you have more questions about this, working with investors, if you're a licensed real estate agent or an investor and want to know more about investing in real estate and how the investor side of the real estate market works, feel free to contact me. I'd be glad to answer questions and communicate with you about this. Thanks.